Well, good afternoon. My name is Dianne Tipping from the Export Council of Australia. Welcome to this webinar, Export Finance, Prepare for 2021, presented by Austrade and Western Union. On behalf of the Export Council of Australia, I am pleased to be able to participate in today's webinar. We have a long, proud history of supporting Australian international business. We have been supporting companies to grow internationally for over 65 years. And we achieve this goal by developing international business skills, building Australian business capacity, conducting international market research, helping to break down barriers to trade, building global networks, and informing Australian trade policy. We have a strong membership and stakeholder base and are proud to also work very collaboratively with Austrade and Western Union, and of course Austrade, to support exporters. The topic of this webinar, finance and the outlook for 2021, is on everyone's minds at the moment, so a good topic to discuss. Austrade and Western Union Business Solutions are pleased to collaborate to bring you this webinar on export finance and how to better prepare your business for exporting in 2021. Austrade is the national peak industry body representing Australia's vegetable and potato growers. Austrade represents vegetable growers through agri-political lobbying to all levels of government and also delivers a range of services to growers in science, the environment and biosecurity. Austrade also delivers a comprehensive export development program for the industry, focused on building industry export capability and resilience, expanding market access, and providing growers with export market development opportunities. The Export Council of Australia and Austrade have collaborated for many years on a variety of export activities, including recently launching a new online e-learning training program targeted specifically at aspiring vegetable exporters. Please do check out the Austrade website for more information. Austrade would like to thank Western Union Business Solutions for their support of the vegetable and potato industries. So for today's session, we are joined with, together with Austrade, represented by Chris Schreurs from Schreurs & Sons, Western Union and Austrade. These specialised organisations will discuss the outlook for 2021, currency trends, export marketing funding opportunities, practical tips to better manage the financial risks associated with exporting, which will help protect against unfavourable currency movements and better prepare your business for exporting in 2021. I would now like to introduce our first speaker, Stephen Dooley, Currency Strategist, APAC, Western Union Business Solutions. He's worked for, sorry if I could just read his bio again, it's a very good one, so I need to get it right. Okay, I would now like to introduce our first speaker, Stephen Dooley, Currency Strategist, APAC, Western Union Business Solutions, to provide some background on Western Union and a market update on the financial considerations for 2021. Stephen has worked in financial services for more than 15 years, originally covering markets as a journalist. Stephen later worked as an investment specialist at global fund manager Aviva Investors, and then worked as head of trading at research house Australian Stock Report. Thank you, Stephen.
Thank you, Dianne. Really appreciate your introduction there, and thank you very much to both the ECA and Austrade for having us here today. Really grateful for the opportunity to present. It's been a wild ride in 2020, and we certainly expect market volatility and uncertainty to continue. So that's really why we're so happy to be able to present today and really outline some of our expectations for what trade and markets might look like in 2021, and look at some of the ways that we've been working to help our agribusiness clients last year, and the ways we hope we'll be able to continue to help these businesses into 2021. But like Dianne said, I wanted to start off with a quick update about what Western Union is and what we try to do for our clients. Western Union's one of the largest non-bank financial services firms in the world. We operate in over 71 different countries with our clearing network. We've got 500,000 agent locations around the world, and we've got offices in 29 locations globally. So we've got that global expertise and local knowledge really where we can help businesses no matter where they're trying to transact and no matter where they're trying to make payments into. So that's certainly Western Union. We've always been a technology firm. I like to make the joke that back in 1851 when we started, the absolute cutting edge of technology was to put telegraph lines through the Wild West. And we've continued to develop through the last 170 years. We did our first money transfer in 1871. We launched America's first commercial satellite in 1974. And we've really continued to focus on digital solutions to help businesses, no matter what industry they're in, to help them make payments effectively, quickly, and to provide them with a level of information to help them make well-considered business decisions. The section that I work in, Western Union Business Solutions, focuses specifically on business-to-business payments. So that's not just payments, as I mentioned, individually to business, but also bulk payments in sectors like financial services, legal and payroll, even education, student payments. So individual and bulk payments, risk management, which is really the area I focus on, helping businesses manage their foreign exchange exposure. And then, like I said, we're a technology firm, so helping those digital solutions to sometimes make payments in real time, make them near fee-free, and to help you have a real understanding of your business's current position. So that's really the three areas that my area, Western Union Business Solutions, works in. I wanted to touch off with a couple of key insights that we've recently obtained from a big survey we've done of over 4,000 clients and non-clients around the world. But first of all, I wanted to sympathise with everyone on this call that has any kind of exposure to managing the Australian dollar. If it feels like it's a really tough responsibility you have, that's because it is. The Australian dollar moves on average 19% per year. And you think about where we are broadly at the moment, about 70 cents. That means in an everyday, ordinary year, we might move down to 63 cents. We might move up to 77 cents. That'll be a pretty average year. Of course, so far, we've seen anything but an average year. We started the year falling down to 55 cents and then rallying back 20 cents, close to 75 cents. So managing the Australian dollar, if it feels like a tough job, it's because it is. And the Australian dollar is probably more volatile than most other currencies because it's not just what's happening in Australia that drives the Aussie dollar. The Australian dollar, because we're so tied to commodity expectations, and it means that we move in line with global growth expectations. That's why we plunged in March, and that's why we've rebounded in the second half of the year. Worries about global growth followed by hopes that we might see a more normalised state back in 2021. We're also seen as a proxy for China. Any bad news about China sees the Aussie dollar fall. Good news sees the Aussie dollar rally. And over the last couple of years, we've seen these big moves driven by concerns about that US-China trade war. And then finally, the Australian dollar is often seen as a bit of a speculator's paradise because of our relatively high interest rates, which are still higher than the rest of the world. People tend to invest in the Australian dollar for the interest rate advantage. So that's one more reason that caused the Australian dollar to be so much more volatile than other currencies. So it's with this volatility in mind that we did this survey of 4,000 clients around the world. We asked them, what their biggest concern is in terms of managing foreign exchange. And previously, it used to always be about markets. What's the market going to do? How do I get the best price? Nowadays, it's about international trade and geopolitical developments. The US-China trade war, Brexit, these kind of economic changes have caused financial markets to become even more volatile. And so it just makes it more and more difficult for businesses to try and manage their foreign exchange. Now, the other thing we noticed that was interesting with this survey is what businesses do to try and manage that volatility. Globally, 21% of businesses still just accept the impact of foreign exchange movements and it just impacts their bottom line. So that's been a real wake-up call to us. We think businesses can do better. You don't need to leave yourself to be hostage to what financial markets do. You can try and take control by looking to manage your foreign exchange exposure. In Australia, it's even more. 22% of businesses just say, well, we'll just cop it on the chin. The other factor we've seen is that globally, 16% of businesses says they pass on their costs to their customers. Now, in some areas, that's fine, particularly in commodities. It's seen as a cost of doing business. But again, that really depends on what your competitors are doing. You might be passing the costs on to your customers, but if your competitors aren't, all of a sudden you're at a competitive disadvantage. And even if you price your goods overseas in Australian dollars, again, if your competitors don't, then you're pushing the FX risk onto your customers, and your competitors are taking control and potentially putting themselves at an advantage. So FX can be, as we mentioned, incredibly difficult to manage, and more importantly, incredibly difficult to predict. And that's why we really believe here at Western Union Business Solutions, the main focus is to try and remove the prediction side of the equation and instead try to look at how you can manage the impact of foreign exchange. So I just wanted to quickly touch on some of the big market themes we expect to see over the next 12 months. And we think about where the Australian dollar might be. We've already mentioned the Australian dollar moves on average about 19% per year. So this is our view of where the Aussie dollar might trade over the next 12 months. Any kind of negative news can see us fall down towards around 63.50. Any positive news can see us move up towards 81 cents. And again, like I said, these aren't wild speculation about what might happen. This is the historical kind of trends that we see in the Aussie dollar. So what might push us down towards 63, 64 at some point in the year? Well, our main concern is the very big rally we've seen in equity markets over the last 6 months. Incredibly, the Dow Jones is up 60% since its mid-March lows. The NASDAQ, the technology stocks in the US, up an incredible 80%. So after a huge rally like that, the risk is we can see a broader sell-off in equity markets. And the Australian dollar very closely tied to global equity market performance. So that's one of the big risks we believe can see the Aussie dollar, as we mentioned, head back towards the mid-60s at some point during the year. What can help us? Well, probably the main focus is low interest rates. And incredibly low interest rates around the world have seen interest rates in Australia, New Zealand, the US near zero, and in Japan and Europe below zero. So historically, that's had a pretty powerful effect on the global economy. Even more so is the incredible amount of stimulus we've seen from governments around the world. This chart here in light blue shows you how much stimulus we've seen from governments around the world. In Germany, Japan, it's almost 10 times what we saw during the GFC. In Australia, as you can see here, the stimulus from governments is more than 3 times we saw during the GFC. So these are the kind of conditions that can mean that the Aussie dollar and the global economy can recover quite substantially in 2021. And this chart here shows you just how quick the performance of the introduction of stimulus has been. This shows you that over 5 years, the amount of stimulus we saw, like we saw in Japan, like we saw in the US, around about 5% of GDP. Already 12% has been introduced in the first 12 months. So there certainly is the potential for a lot further improvement in global economic growth. One of the main concerns that we've noted is that global trade has taken a hit as a result of the global trade war we saw between the US and China. So some of the expectations that we might see China provide a support like we did in 2008 and 2009 probably isn't quite as likely as we might see in as we're likely to see this time around. So I'll just finish up by saying, what are we saying to our clients or to businesses in general when you look at the incredible volatility we expect to see in 2021? Well, really, the main focus is that we can't predict where the market will be. We can't control where the market will be. So the best thing that businesses can do is really follow a pretty simple 3-step plan. Identify your currency exposure. Now talk about the technology we have. That really helps businesses manage and understand their currency exposure. Set your goals. Do you want to make sure that you don't take an FX risk, or do you want to make sure you can benefit if the market moves down to the mid-60s at any point over the course of the year? And then finally, develop your hedging strategy. And that can certainly be with us, or it could be with any financial institution that you manage your foreign exchange with. But it's important to follow a 3-step plan and not go into it blind. And importantly, as you saw in the first instance, we don't want businesses just to continue to absorb the costs or to pass on the costs to their clients, but there's a better way of doing this. So, as I said, we can't predict the future. We can't get you the best rate, or make sure that you always get the top of the market or the bottom of the market. That's just not possible. It's not what we're trying to do. What we're really trying to do is to move you from a business where you see incredible swings and moves in your cash flows to having a business that's very predictable and helps you make better and more sound business decisions. So in a year, as we said, with real volatility in 2020, these things don't change overnight. There's an expectation that we'll continue to see volatility into 2021, and we believe we can really help your business to manage that volatility in a sound and thoughtful way. So that's it for me, and I imagine we'll have some questions at the end of the presentations. Is that right, Dianne?
Yes, that is correct. Thank you, Stephen. A couple of things that I would like to talk about at the end and ask you again on, and that's the global growth prospects and the volatility. A bit more on that would be great when we get to question time. A couple of things I took away from that. I thought that 65 years for the ECA was pretty good, but 170 with Western Union is amazing. I wasn't aware of the longevity of Western Union. That's a really strong, historically, secure, safe organisation that you belong to. So well done there. And the digitalisation that your company has done over that time, I don't think a lot of people would even think about the digitalisation aspect of all of this. So maybe a little bit more about that later on as well. Thank you, Stephen. Thank you.
Thanks, Dianne.
I'd like to remind our viewers today to send their questions through the chat box. We will do our utmost to answer as many as possible as we go through the session. I think Stephen's commentary actually does have some points there that we can ask more questions on, and I hope to ask those questions during the panelist question time. But please send your questions in. We'd really like to have your questions, and I will ensure that they're asked or responded to in some way if we don't have time. Okay, moving on to Chris Papademetriou, who is Acting Regional Manager, New South Wales and ACT for the EMDG Department of Austrade. We all know Austrade, but as I will just give a little update on what the concept of Austrade is all about. The Australian Trade and Investment Commission, Australia's leading trade and investment agency. They are experts in connecting Australian businesses to the world and the world to Australian businesses. And we need to remember that. They have connections all around the world. They have a proud history also of helping Australian businesses pursue their global ambitions and have the power to open doors, unlock opportunities, and help Australian businesses go further and faster. So a little bit about Chris. Chris has worked in the EMDG unit as a senior grant auditor for over 26 years, assisting small to medium Australian businesses export their products to the world. Chris is passionate about EMDG and assisting Australian businesses access the program. He is proud of the fact that the Australian government provides assistance to Australian businesses, encouraging them to promote their products to overseas markets and in turn contribute to the Australian economy through the generation of increased export sales. Over to you, Chris.
Thanks, Dianne, and thanks for having me, everyone. So I'm going to give you an introduction to the Export Market Development Grant Program. And this. Thanks. Okay, so EMDG is a key Australian government financial assistance program for aspiring and current exporters. It's designed to encourage small and medium-sized Australian businesses to develop export markets. For applicants that have incurred $15,000 or more in eligible export promotion expenses, EMDG will reimburse up to 50% of those expenses above a $5,000 threshold to a limit of $150,000, and it provides up to 8 grants to each eligible applicant. So what you can claim, there are various expense categories that are eligible. We've got overseas representation, marketing consultants, marketing visits, free samples, trade fairs, seminars and in-store promotions, promotional literature and advertising, overseas buyers, and registration and/or insurance of eligible intellectual property. What expenses can't be claimed? It's expenses that do not fall into one of those 8 eligible categories. Also, those expenses that are specifically excluded include sales-related expenditure, expenditure of a capital nature, and expenditure for promotion to trade embargoed countries. Expenditure incurred for promoting to New Zealand and North Korea are not eligible. Those that are not incurred by the applicant, or expenditure that's incurred outside the grant year, and expenditure that's been reimbursed by third parties. So the EMDG scheme underwent a review last year, and the government has accepted the recommendations of the review. And so basically, the scheme will be simplified and reoriented for a scheme providing assistance through reimbursement after expenditure to an upfront grant agreement. So this will give eligible exporters funding certainty before they embark on their marketing and promotion activities. So the new EMDG program will maintain features valued by SME exporters and industry bodies while making it simpler to access. So that's the whole idea of it, to make it simpler. In the new EMDG program, multi-year grants will be available for eligible SMEs at 3 stages of their export journey. So we'll have the eligible SMEs who are new to export will be able to access grants totaling up to $80,000 over a 2-year period. For eligible exporters who plan to expand their presence in current markets or enter new markets, grants totaling up to $240,000 over a 3-year period will be available. And then there's those exporters who continue to expand into new markets will be able to access further grants totaling up to $450,000 over a 3-year period. So to be eligible for the EMDG program, SMEs will need to be export ready and have a turnover of less than 20 million. So unlike the current reimbursement scheme, which saw exporters waiting up to 2 years for payments, basically now it will become an upfront funding certainty over multiple years for marketing and promotion activities. So the current arrangements, the important bit to note, the current arrangements remain in place for this financial year. So basically what that means is that expenditure that's been incurred now in the 2021 financial year will be claimable under the current rules, and then the new scheme will commence on the 1st of July 2021. So what that means actually is that in 2021, you might actually make 2 claims, one under the current scheme and then one under the new scheme. But if you want more information on the current scheme and also some of the changes with the new scheme, you can just visit our website, which is austrade.gov.au/export grants. You can call our 132878 number and speak to an EMDG officer, or you can email us at emdg.help@austrade.gov.au. There's also export grant consultants that can help you with completing the application and lodging it for you. And there's a list of those that are part of our quality incentive program listed on our website, so you can see the website for details. So thank you, everyone. That's sort of a very quick overview, but I'll welcome any questions during question time.
Thank you, Chris. Just as a curious question, how long has the EMDG in its current form been going for, Chris?
Okay, so it's been going since 1974, so...
Okay. So good things stay around. Good things stay around. Okay.
Yeah, that's right.
We might ask you a few more questions as we go into the question time on how exporters are working with you at the moment with the EMDG claims, and if there's a lot of exporters claiming. We'll come back to that though, but that'd be something that would be quite interesting to know how things are going in that area. Thank you.
Thank you.
Okay, so our next speaker is Chris Schreurs, Director and Business and Commercial Operations, Schreurs and Sons, a vegetable grower and an exporting business. Chris completed his Bachelor of Science in Genetics and Bachelor of Business, Banking and Finance in 2003, and then spent a year at ANZ before moving to Scotland, taking up a position with Morgan Stanley. Moving to London in 2005, Chris spent the next 3 years working as a consultant for Sapient Global Markets before helping to set up their Asian head office in Singapore. In 2010, Chris headed the business operations for Sapient Singapore, as well as becoming an account director for Sapient Nitro, leading the business development of digital design and marketing for the financial services sector. After leaving Sapient in 2012, Chris moved back to Australia to assist with the business transition of Schreurs and Sons, where he now leads the business and commercial operations of the company. So, Chris, over to you.
Thanks, Dianne. I guess one of the questions that was proposed to me earlier was, what is my background in finance or export finance specifically? I guess it's more of a broad understanding because of living and working overseas for the best part of a decade. Gave me a good appreciation for foreign exchange and the risks, I guess, that are with that in terms of buying produce or buying goods and services or selling goods and services, particularly being when we're based out in Asia and in the UK. And so you really need to have an understanding of the fluctuations between currencies, from my point of view, both in a historical sense, as Stephen demonstrated earlier, also looking at, future-proofing yourself with either, looking at forward rates and even the spot rates. And a lot of that really, for me, in my experiences, it really came into the timings of conversion and doing those trades. That really did cover a lot of the stuff of what we did in selling and purchasing of our services when I was working over there. So that's been my background in a broad sense, working in the export finance arena. Dianne?
Thank you, Chris. Yeah, I actually should have asked you a bit more, but I think your bio was really quite complete about your financial background, and I think your trips around the world and your working overseas for, I think, what was it, 2003 to 2000. I'm just haven't got the dates in front of me now, but you were away for quite a long time, so you obviously did have quite a lot of financial experience and knowledge in that time.
Yeah, it was quite a mixed experience, but truly worthwhile and set me up for really understanding, I guess, the risks and the opportunities going into export when I came back to Australia and started working in the family business. So yeah, it gave me a bit more comfort in that understanding those markets, particularly in Asia. And the risk around doing business in Asia.
Yeah. So Chris, have you do you want to give us a little bit of background about the company and how their exports, what they're exporting and how they're exporting, who they're exporting to, countries and so forth. Yeah.
Yep. So our business has been going for over 50 years, and we've dabbled in export previous many moons ago. They started doing stuff into Japan for a while, until I believe some strikes on the wharves happened in the late 1990s that basically stopped their ambition at the time of doing any export. And then we really brought back into it in about 2014, and really started looking into, diversifying our risk. Really, we saw a lot of pressures here locally on prices and potential drop in demand. And so we looked for other markets elsewhere to really try and diversify our portfolio. And so, growing celery is quite a vegetable that is becoming more and more of a commodity, I guess. And so we ventured out, and obviously we went to Singapore and established a market there, and into Hong Kong, Malaysia, and Dubai as well. And we re-engaged Japan for a short period of time there as well. And we did that over a period of 3 or 4 years. And now we find ourselves in a nice position where we've got a nice balance of export, trading in export and domestic market. And our business seems to be growing on that. And we're seeing more and more opportunities in the export arena, even throughout COVID.
Okay.
Yeah.
So Chris, just with COVID, obviously there've been a few issues with logistics and other things, not just the finance, which I'll come to in a moment. But how have you managed to get through? The Australian government has been supportive with the IFAM package, and I imagine you're using some of those services at some point. Yes.
Yeah, we have, and I think there's been I think we were looking at the COVID situation, and looking at the risk appetite, and also the impact that COVID's had on that. I think there's two parts of that. Is looking at the understanding your risk appetite for export in the first place, whether that's air freighting or sea shipments. And I think looking at your risk appetite, you've got to look at understanding how your business can deal with trading overseas, and in the complexity of your business, and therefore that's to really know how you can handle the FX fluctuations and so forth. So I think and I think Stephen touched upon this in his speech before, is that you really need to have an understanding of both sides of the fence, your risk appetite and also your client's risk appetite. And, if you're trading, if you're selling an AUD, which we do actually, it doesn't mean you don't have an exposure to that. But the fact is you still do have an exposure to FX risk. It's just a little bit more hidden in a way that a strong AUD may impact your sales volume, because the cost of your client goes up, and which for your client to balance that risk out, they might look for cheaper items elsewhere, from America or South Africa or wherever the case may be. Another area there is to really understand that is when you start to quote or providing a discount to your client, you really need to know what that currency is doing and how it's been performing. Particularly volatile currencies such as the AUD, because you don't want to be putting yourself in a challenging position where you're quoting too high or quoting too low. The price needs to be at a sustainable level for you to be able to sell your product, for your client to also be able to sell their product and make a living as well. So, trading in an Aussie dollar is always, I think it's also a lot of luck and timing, and really comes into it. And the impact of COVID's had on that, particularly with air freight, has been a massive challenge, because even with the government subsidies, the cost of freighting over has more than doubled. So instead of spending maybe on average $15 a box to get it over to A to B, we're now seeing costs of around about $30 a box, $35 a box, depending on where it's going, and that's having a massive impact on the other end. And therefore we're being asked to can you do any more on your price to try and mitigate that risk. And inevitably, we've done more sea freight than air freight during this period of time.
Yeah, I won't. If we have time, I might get you to tell the story of the sea freight shipment that you probably lost sleep over recently. But I think that a couple of things I took away from some of your comments. Again, another well-established historical business, been around for a long time, and knows a lot about how the system works. But also, COVID has just thrown us all for a curveball. And I think, one of the things, and I liked one of your comments about what the customer needs as well. The ethical part of that conversation was really good to hear. And I think a lot of exporters need to think about their buyers. I'm sure they do, but they need to think about their buyers as well. So when you're looking at payments and funding and the costs, it needs to be that plan that's worked out. I'm sure you'll agree, and you may have a comment on it. It needs to be worked out quite a while before you actually do the shipment, so that there's the risk is mitigated as less as possible, down to not having any issues if something goes wrong. No one predicted COVID, but I'm sure that your risk mitigation plans were probably strong enough to get through a lot of that quite well.
Yeah, what we found pretty much right at the start of COVID, March wasn't so much of an impact, but, coming into April and May, when that first wave and those lockdowns were all really gearing up, not just in Australia, but overseas, is that, that our clients, were feeling the same pressures as, particularly our agent clients, our wholesale agent clients, were feeling the same pressures that we were here, being, exposed to, the food service trade. So their businesses in food services was going down, as well as, our clients that were, supporting food service here, were struggling with their cash flow and what have you. So what we saw for the short term was a bit of an erratic, a bit more payments were a bit erratic, and a little bit of a slowdown in the short term. So we had to sit down with them and go, right, well, what do you guys need, and does that work out for us as well? And it was a pretty quick conversation and pretty quick plan put in place, and it's been working well. And to be able to have that confidence in your client to be able to work something out, give them the time to work it out themselves as well, and get on top of things. I think we all needed to adjust a little bit, and yes, we were nervous, at the start. But as we got through, April, May, and coming into June, July, things just picked up again, and it became, you got into a different cash flow pattern, which it still works out, right? And so the impact it was very, very short term. So as long as you be able to react to it and be agile, be able to work out what you can do and what you can't do. I think the impact was quite minimal. So we're very lucky in that situation.
Good, thanks, Chris. I have a question that is for both Chris and Stephen, and I'll ask you, Chris, because you're talking currently. It's how would a grower who hasn't dealt with FX get started? And I think there'd be two perspectives here. Obviously, from a grower's perspective and from Western Union's perspective. So, Chris, can we start with you on that question, please?
I think from our perspective, where we were at starting out in the export again, I guess, export 2.0, when we started back in 2013, we just felt a little bit more comfortable just dealing in the Aussie dollar. And at the time when we started, the AUD was trading, fairly strongly against a lot of the currencies. So our approach was that if we can start this export game up when the Aussie dollar is pretty strong and still take market share away from the Americans, for example, where their cost of goods are a lot cheaper. We built that confidence around that. We thought we could achieve it at any time, at any stage, and so we just felt more comfortable doing it then as well. And then I guess when you look at your business, if you're looking at wanting to purchase equipment and what have you in a currency that you might be dealing in Singapore dollars, for example, or trading with someone in Singapore, and you want to purchase equipment or purchase items quite regularly from Singapore, I think trading in Singapore dollars might benefit you in that regard, where you can hold on to those Sing dollars without too much knowing that you can spend it over there to bring in goods over here. So I think it just depends on the nature of your business and how what's important to you and where you feel more comfortable with at the end of the day.
Yeah. Okay. Thank you. Stephen, maybe you'd like to answer that same question from Western Union's perspective. How would a grower who hasn't dealt at all with FX get started?
Yeah, thanks, Dianne. Look, I think Chris made a lot of sense when he talked about how he started out as well. That it depends on the size and the impact of what that project is going to be relative to your business, your current business size. So, I guess the first thing you'd be thinking about is what kind of targets do you have that you're hoping to sell overseas, and what kind of size is that relative to your business, and what kind of impact is that going to have? If it's an incremental start of a business that's already got domestic operations, then I'd say, look, initially it's just about being able to receive the payments. It's initially about just having that ability to transact easily. That's probably far more important than the risk management side of the equation. So that's probably where I'd start off, is to say, make sure you've got those processes in place, and you don't really need to initially overcomplicate factors. But as it becomes a larger and larger part of your business, then suddenly risk management is going to become more important. And particularly when we're talking about more commodified exports, they traditionally have smaller margins. There's less room for a mistake on an FX side of things. So as it increases in size, then that's when you probably do start to need to have more of an understanding of when the exposure arises, how much it's going to impact, and what an average move in the market can impact on your business. So I guess that's really where it starts off. If someone is looking to start and it's part of they've got a large domestic operation and they're starting to export overseas, then there's no need initially to overcomplicate it. Get the market share and get the transactions operating well, and then starting to think about the risk management. But as overseas becomes more and more of a percentage of your sales, then risk management will become increasingly important. FX often isn't a problem until it is. It's just one of those factors. It's one of those low-level risks that's moving through your business, and it's easy to forget about it until something goes wrong. So once it becomes a decent part of your business, that's when it probably needs to become, FX management needs to become important as well.
Yeah, I agree. I agree with both you and Chris in your comments. And I think what an exporter needs to consider is something that I think was mentioned earlier in the session, and that is, and I think it was Chris S. that mentioned it, that exporters have a view of selling in one currency. Buyers may accept that, but buyers are still necessarily having to think about, the exporter still necessarily has to think about what the buyer's risk is in that as well, and what that cost is to the buyer in that currency that he's got in his country. So again, FX is really important to understand how that works, and to have some concept of that when you're dealing with orders overseas or buyers overseas. Thank you. Chris P., I'd like to ask you a question if I can.
Yeah, sure.
You spoke last week for a short time. You mentioned that a lot of claims have been made already this year. So as we know, the EMDG claim system normally has November as the cutoff, correct?
Correct, that's right. The 30th of November is the cutoff.
Okay, so
and
we better encourage everyone to get their claims in before the next few weeks. Yeah.
yes, so there's 2 weeks to go from Monday, so
Okay.
that's the 30th. Now, the good news is though that if you do miss that cutoff, the list of consultants that are on our website, which are quality incentive program consultants, they've got until the 28th of February to lodge. So if you do miss that 30th of November cutoff, you can lodge through those consultants. But if you do want to lodge yourself or through another consultant that's not on that list, that's on the 30th.
Okay, great. That's good to hear. And remember, everyone, claims to go in before the 30th of November, unless you're using an export consultant and they have a threshold timing of a bit later. So thank you, Chris. Stephen, just from, you've talked a great deal about what Western Union can offer. Just from your experience this year, how, amongst your clients, what sort of things have you done to change anything this year for your clients? Has there been any particular things you've implemented when it comes to export finance and payments due to COVID at all?
Well, I guess probably the main the main shock at the start of the year, not necessarily just in the agricultural space, but more generally, was a lot of businesses would have put obligations in place, thinking that the year ahead was going to be pretty normal, and then of course we had a big shock to the way that things started to progress. So that would probably be the main focus, I think, initially, was trying to work closely with businesses, help them make sure that they're in a position where they're able to get through the next few months. If they've got contracts they don't need anymore, work out a way of either maintaining the value or realising the value for them. So that was certainly the initial, I think, the initial big shock, was having to work closely with our clients. And again, it's something we try and really focus on, having that knowledge of our clients. Our businesses that work with us have a relationship manager, and hopefully they understand the business enough to be able to work through that business as well. So I think that's probably the initial impact, was just the shock that everyone expected the year to progress in a certain way, and it just didn't. So we had to rebalance and reshift for that. And I guess the other focus is that businesses just become a lot more aware of the risks in businesses. Before COVID-19, financial markets had actually gone through a period of unprecedented low volatility. Central banks were all doing pretty much the same thing, and there was an expectation that we would continue to chart that course. So we hadn't really seen any big moves. If you look at the Aussie dollar for the 2 years before COVID-19 hit, it had been a very slow incremental fall. The average range had been about 12%. I said the average is about 19%. So all of a sudden markets had turned really quiet. So I think the other return to a focus on the importance of risk management. And again, for our exporters, I think the big move lower, we went back to 55, and whenever we go down to big moves like that, there's no end to negative commentators coming out to say we're going to go sub 50 and we're going to be here forever. That didn't happen, and we bounced back very quickly. So again, that was a bit of a shock as well, and trying to rebalance expectations after, frankly, spending 6 or 7 days below 60. A lot of businesses thought that we were going to spend the next 12 months below 60, and that turned very, very quickly as well. So I think helping businesses to sort of rebalance and stop trying to play the market, which is a real risk, and instead think about their business. And that's what we were talking about earlier when we said, understand your business. We try and understand your business and work out what works well for you, not trying to play the market and get the all-time bottom and, make millions of dollars on trading FX. If you want to trade FX, there's no end to the amount of FX providers and brokerages out there. We're really trying to help businesses stay stable, have predictable cash flows. So those are the 2 big themes, I think. Firstly, helping businesses reposition themselves after a shock to demand, and second of all, helping businesses refocus on what's important not trying to chase after an Aussie dollar that fell from 70 cents to 55 cents in 6 or 7 weeks.
Yeah, thank you. Thank you, Stephen. I suppose a question that comes to mind, Chris S., is the currency situation is one thing, the way the Australian dollar goes up and down, and whether you sell in Australian dollars or in US dollars or euro, whatever the case may be. Chris, how do you maintain a balance in regards to ensuring that you get paid for your export orders? That's probably a second part to that question about making sure you get paid the right amount, but how do you manage ensuring that you get paid at all, especially now, during this period? How have you managed that?
Yeah, I think the biggest management of that one is really understanding your market where you're targeting, understanding your target market, and then understanding the choices you've got to sell through, whether it's through wholesale markets or through supermarkets and what have you. So I think you need to probably do a lot of research of understanding your client and seeing where the risks are with those potential risks might be with those clients. Wholesale versus supermarket. In a wholesale section, you get different people, different types of people trading, different types of businesses, and really understanding, who are their clients and what have you, and inevitably, a lot of them are going straight to supermarkets now. Supermarkets are becoming more and more dominant players anyhow. So, yeah, understanding your client is a massive thing, and then understanding, what works for the region or for that particular country may vary from place to place as well. So, know your client, know your market, and try and tailor something towards that is really beneficial.
Agree totally. Do your homework is probably the right wording there. Do your homework.
Yeah, do your homework.
We're going to run out of time, and there is a couple of things that I'd just like to do before we have one final round of questions. And I'd like to thank everyone for today. I'd like to thank Chris S., Chris P., and Stephen Dooley for taking time to participate in this webinar today. The insights are really worth considering and taking home, and a copy of this webinar will be sent to all participants at the end or in due course in the next few days by Austrade. We had some great insights from 3 different views, which allowed us to not only have a well-rounded conversation, but also take away ideas for 2021. I don't think there's any easy answer, but I think as long as we listen to the points that have been raised today, so do your homework, understand what the currency situation is, talk to Western Union, talk to people that understand that, and take a risk management aspect to it all. Think about how you're going to protect yourself. That's the best way to manage all of this. But I would like to ask a final question from everyone. So what would you do as a final tip to the participants today, or to any exporters, Chris S., on exporting in this and the financial aspect of that?
I think it just goes back on what I was saying before, is this, a couple of things is, really understand the market, do some research and have an understanding where you want your business to go, and understand the market that you're trying to penetrate, and then look at what the potential options are there for you to sell through, and understanding the client, your market, as well, and ask around to other growers if they're like-minded growers, if they've had experiences with potential client A, B, and C. And they might say, I'll stay away from that one, or yes, that one's, this guy's good, he pays on time, and we've never had a problem. So, it's good to ask around to your fellow colleagues, and, a great platform for that is to, Michael Coote and his team with Andrea Lynn, they have a great knowledge of a lot of that they've built up over the last few years of potential clients and good customers, and even people that other growers that non-competitive growers that they might be able to get you in contact with to have those discussions. So the work that that Austrade does in the export development program there, they've done a tremendous amount of work, and that can surely be a good starting point.
Yeah, agree totally. Thank you, Chris. Chris P, just any final tips for EMDG claims, or
Yep.
about an EMDG claim, or going forward into 2021 from Austrade and your team?
Yeah, so the biggest tip from an EMDG point of view is to get your claim in as early as possible. So claims open on the 1st of July, and historically claims that are lodged by the end of October are usually paid before Christmas or by Christmas, and then the ones lodged in November onwards are sort of done in the second half of the year. So the biggest tip is try and get your claim in before the end of October, and you'll be way ahead of the rest, because we get more than half our claims in that last month. And yeah, just have a look at our website, because it's really good. There's lots of information on there about how to prepare your claim and the records to keep. So start getting those records in order now, so that when you're actually filling in the application, you've got everything there on hand, and you'll be able to do it a lot earlier and quicker.
Wonderful, wonderful. I agree with the website for the EMDG area. It's very explanatory, and
Yep.
I'm not saying it's simple, but it's explanatory, and with the right knowledge and connection to people, it's a relatively simple process to lodge a claim. So
Yep.
thank you, Chris, and thank you to Austrade. They've been fabulous during this COVID-19. They've gone well out and beyond in providing lots of webinars and things on how to manoeuvre the situation and
Yep.
to look at the future of trade and expansion. So thank you, Chris. Stephen, your last few words of tips, please, or guidance for 2021.
Thank you, Dianne. Look, I think looking at how the Australian dollar has traditionally performed as we go through an economic recovery, for exporters, I think the main focus needs to be to look back at 2003, look back at 2009. I don't want to be the bearer of bad news to finish off the call, but historically, as the global economy improves, the Aussie dollar tends to rally pretty strongly as well. So certainly for businesses that are thinking about payments into 2021, be aware of that risk, because I think that risk is more pronounced in a period of economic improvement than it is at any other time. So that will be the first focus. And second of all, we do expect more volatility in 2021, particularly as we go through that potential second wave of COVID in the Northern Hemisphere, and as we mentioned in the presentation, with higher equity markets as well. So that can produce an initial move lower in the Aussie dollar as well. So potentially there will be the opportunity for businesses to take advantage, for exporters to take advantage of any move lower as well. So really be prepared, I think, to take advantage of that. Don't try to focus too much on the market. Focus on what works in your business. And then finally, if 2020 taught us anything, it's having some flexibility embedded in your finance as well. Absolutely key as well, because we just don't know how things will play out. So a combination of those, understanding of the risk, ability to benefit if the market moves in your favour, and some flexibility will work well in 2021. And the reason I say that is because it works every year, and that's really what we're trying to do, is just to use those tried and tested rules to help businesses succeed next year.
Wonderful. Thank you, Stephen. Thank you again to Chris P, Chris S and Stephen for an insightful webinar and some good points to take away. I would also like to thank Austrade and Western Union Business Solutions for bringing you this webinar on export finance and how to better prepare your business for exporting in 2021. Thank you also to our participants, and a link to this webinar will be distributed by Austrade to all participants within the next few days, as noted earlier. Best success to everyone. Thank you.
Thank you.